Hello there, world. Welcome back to my channel. If you're new here, I'm Joe, a licensed, certified public accountant with over 10 years' experience in corporate and public accounting. I have an extensive background in accounting, audits, and taxes, and I'm all about helping you take control of your money and live smarter. If you're running a startup or thinking about launching one, you probably heard this 1,000 times. You need a solid financial plan to grow. But what does that even mean? What does a financial plan look like if you're not an accountant or a money expert? Well, today I've got you covered. I'm breaking down the basics of financial planning for startup growth in a way that's simple, clear, and made for real people, not Wall Street. Don't forget to hit that subscribe button and check back for more videos. And be sure to check out our blog site where we post every Monday, Wednesday, and Friday. So let's start with the obvious. Why does this matter? You can have the best idea, the best product, and the most passion in the world. But if you don't know your numbers, your business can crash and burn out. When your business is just getting off the ground, every dollar counts. Without a plan, you might overspend and run out of cash. You can miss out on growth opportunities. You might not be prepared for taxes or a slow season. A financial plan can really help you make smarter decisions, know when to grow or slow down, manage cash flow, and raise money if you need investors or loans. It's not about predicting the future, it's about being ready for it. Okay, so step one, know your numbers. And I don't just mean how much is in your bank account, I'm talking about three basic things. Number one, revenue. You got to know how much money you're bringing in. Number two, expenses. You got to know how much money is going out or what you're spending. And then number three, profit or loss. What is left after expenses? Here's an example. If you make $5,000 this month and spend $4,000, you made $1,000 profit. But if you change that to $6,000 you spent, you're losing money. Here's a tip. Use a simple spreadsheet or some kind of free software to track this. You don't really need a CPA, just consistency. Next up is cash flow forecasting. It's a fancy term, but here's the idea. You need to know when money is coming in and when money is going out so you don't run out of money. Here's a few questions to ask yourself. How much cash will I have in 1 month? Will I have enough cash to pay bills, make the payroll, or buy inventory? What if I lose a client or have a slow month? Here's an example. You might make $10,000 in a sale, but if your client pays you in 30 days later and your rent is due tomorrow, you've got a cash flow problem. You should plan at least 3 months ahead, weekly if possible. The more visibility you have, the better decisions you'll make. Now, let's talk growth. What does growth actually look like for your business? Part of our startup growth is to set smart financial goals. What does SMART stand for again? S is for specific, M is for measurable, A is for achievable, R is for relevant, and T is for timeline. Now, here are some financial goals and what they may look like and which you can incorporate in your startup business. I want to increase revenues by 20% in 6 months, cut expenses by 10%, launch a new product that brings in X amount of dollars per month, reach profitability by Q3. Whatever it is, make it specific and trackable. Don't just say, I want to grow. Say what you want to grow, by how much, and by when. Here's another bonus tip. Review your goals monthly, adjust them if needed. It is always okay to pivot. Next, you have to create a simple budget. But let's be real, no one loves budgeting. But if your goal is to grow, you need a plan for how you'll spend and save. Here are some basic items that your budget should include: operating costs, such as rent, software, inventory, marketing and sales, teams and payroll, even if it's just you, emergency or buffer fund, growth investments, such as ads, tools, freelancers, Don't spend based on how much money you hope to make. Spend on what you actually have. Last step, know when to ask for help. You don't have to do all the math yourself. You might want to talk to a bookkeeper or an accountant for tax and records, a business coach or a mentor for strategy. I highly recommend this. A financial advisor for planning and raising capital. Even a one time session with a pro can save you tons of money, stress down the line. Let's do a quick recap of how to create a financial plan for startup growth. Number one, know your income, expenses, and profit. Number two, forecast your cash flow. Number three, set clear, specific financial goals. Remember, SMART goals. Number four, build a basic but realistic budget based on what you have now, not what you want to make. And number five, don't be afraid to ask for help. Don't do it alone. You don't need to have all the answers. You just need to have a system that helps you make smart, confident decisions. Financial planning isn't about being perfect with money, it's about being intentional. When you understand your numbers and have a plan, you make better decisions, take smarter risks, and grow your business on purpose. Start simple, review your numbers regularly, set goals, build your buffer, and keep moving forward. If this helped break things down, hit that like button and tell me in the comments what's one financial goal you have for your startup right now. I'd love to hear it. I'll see you guys next week when we go over business grant accounting tips. Don't forget to hit that subscribe button and check back on our YouTube channel for more videos. And don't forget to check our blog site where we post every Monday, Wednesday, and Friday.